So for today, we're going to be talking about market structure and the importance of market structure. And as you guys know, I trade BCM and I also combine that with order flow and supply and demand, right? But not to confuse myself or confuse you guys, it's just a way of confluence for me, right? So we're going to talk about market structure, right? And market structure is basically one important factor that you need to look at when trading, because this will be your guidance, right? This will give you an idea of what you need to look for, right? And this will also keep you from, placing unnecessary trades. You find people who trade 10,000 times a week, and honestly, there's no way you're going to be profitable if you do that. Honestly, to be profitable and consistent, you do not need to trade 1,000 times a week, right? I'm okay with 3 to 5 trades a week, right? But you find people looking for 18 to 25 trades a week, right? And that usually leads to over trading, right? So the most important thing that we're going to focus on here on this video rather is market structure. Remember, this channel is basically designed for more of the advanced people, right? Not really those who are looking for basics, right? So for those people who have been in the market and have an understanding of order flow, PTMM, this should be easy for you to understand. Okay, so the first thing we're going to focus on is an uptrend or an up phase, right? Up phase, I'm just going to mark it down as UP, and we're going to also focus on the down phase, and I'm going to type that down as DP. Right, so in an uptrend, what we're going to have is we're going to have the market push up, giving us a higher high, giving us another higher high, giving us another higher high, and then giving us another higher high. So keyword in this is the market keeps breaking higher highs. This is what will basically tell you that the market is in an up phase. All right, so will the market continue moving in an up phase? No, as we all know, the market moves in phases, and the market can change the direction at any time, right? So as we are in an up phase, right, we are going to reach an area where we're going to have a decision phase, right, where the market will change the direction, right? Now, when the market changes direction, remember, if you guys have watched my videos, I have spoken about base areas, right? When the market changes direction, all right, what we are going to have is the market. Remember, as the market pushes up in an up phase, we see consecutive higher highs, right? In this case, the market will push down, breaking this previous structure, right? Breaking this previous structure. Remember, we've got a higher high, higher low, higher high, higher low, higher. So this higher low right here, right, will be broken, giving us a lower low. This is the first sign, right? This is the first sign that we are given when the market has changed, right, the phase rather, or the direction, right? So the market will give us this lower low, that being a structure breaker, and the market will give us a nice retrace back to a base area, right? Now, what is going to give you the confidence to know that this is now a down phase, right? We're going to have a higher high, which is going to be missing. As you can see, we do not have another higher high. We've got a higher high missing, and as the market continues going down, right, we see consecutive lower lows and lower highs. This is basically market structure simplified for you guys. Right, now, how are you going to be applying this information on your charts, right? I have an example for you right here. Now, this is what we have. As the market is moving down, right, we've got a lower low, lower high, and a lower low, right? And as we have this lower low, market reaches a demand area, right? Market reaches a demand area, and as the market reaches a demand area, remember, what do we have at these demand areas or base areas? We've got orders, right? Rather, institutions have their pending orders right there, and those pending orders need to be filled, right? So as you can see, this is recent structure, a lower high, right? This is recent structure. Now look at what we have. We've got market moving up, creating a base area, and then we've got a structure breaker, right? As you can see, this structure right here has been broken. Now, how are you going to then make a decision from here? You're going to look at which area is responsible for breaking structure. Now, in this case, this is the base area which was responsible for breaking this structure. So as the market moves up, we're going to wait for good price approach back to this area, and we're going to look to take our position and go long. Do you see that if you can focus on such, this is in line with the market structure? This is in line with the market structure, and you are taking these trades at your base areas. Now, where do most people go wrong? Most people go wrong when they see the market already moving up and they want to enter long there. And I know most of you guys will over leverage your accounts, and then this move blows your account. Market comes back to the area responsible for breaking structure, and market then moves in your direction. This is where you find that you do find yourself in situations where you were right about the direction, but your entry point was just the wrong entry point, and manipulation really messed you up. So we're going to look at the same thing, right, in a down phase, right? Remember, this is a up phase, right? Remember, this drawing right here might seem easy, but when we go to the charts, it might be a bit different, and we're definitely going to look through the chart, so do not worry, right? So we've got market coming from a supply area, right? We've got market coming from a supply area, and we've got a lower low, right? Lower high, as you can see, right? Now, from the lower high, we've got a structure breaker, this being a lower low, right? So, which area is responsible for breaking this structure and giving us a lower low? This base area right here. What do we wait for? Now, the problem is most people who see this move already somewhere here, or they'll see this move down here and they're like, okay, price is broken support. You know, these people, they're still support and resistant traders, right? They're like, okay, price is broken support, so they're gonna go short there, right? And guess what? They get trapped as the market moves back to the base area responsible for breaking this structure. Some accounts are blown, some people's stop losses are hit, and then we've got market moving away from that area really fast, right? So we're going to look at GU. We're going to look at GU from the daily time frame, or even the 4-hour time frame. Right. We're just going to look at examples. So here's an interesting one. We can all see that this is a demand area, right? Now, for those BTMM traders, this is a multi-session W formation. Not even multi-session, multi-week. Sorry about that, guys. Multi-week, as you can see. Here's our first leg, second week, third week, and this is when we had another second leg. So some people will call this a 22 trade. All right, fine. So what happens after that, right? Let's say you've missed the peak, right? You have missed this peak, or you're not sure about this peak. What are you going to focus on the most? You're going to focus on structure, right? You're going to focus on your structure. So what do we have? We've got the market moving up, all right? As the market moves up, what do we have? Structure is broken, right? So this, in this case, is a higher high. Right now, what happens after that? Remember, you need to be very selective, guys. You're not just going to trade everything. So what do we have? Higher high, and then we've got the pullback, right here, right? A nice base area, right? Now, why would I focus on this area more? Because this area is the reason why this structure was broken, this structure was taken out, and also this structure was taken out. So more confluence, right? So I'm going to focus on this. Which base area is responsible for breaking these three structures? This one. What do we have? After the market has given us that higher high from this area, right? After the market has given us that higher high, what do we have? We've got the market coming back to the base area, and I want you to look at how price then moved away from that area. Right. These areas are very important, and very powerful. But the trick is you need to be very selective, right? You need to be selective. You will not just find this on every pair. No, you will not just find this on every pair, guys. You need to be very, very, very selective. So if we can switch over to our BTMM. Sorry about that, guys. If we can switch over to our BTMM, this is how we have it, right? So do you see how many people would get confused right here? With the EMAs, right? Many people were definitely going to get confused right there. You're going to get confused. But if you can go down to our 1 hour, right, this is what we had. As you can see, a nice peak formation, right? We've got level 1 into a consolidation. Right, let me just draw down into a consolidation, and then we've got level 2, and then the market comes back to that level 1, right? So before you look at all these traps at the EMAs, your market structure is the most important thing. Your market structure is the most important thing. As you can see, look at how price got into that base area. These are your vectors, 1, 2, 3, right? But the most important thing here is your market structure, nothing else. All right, these EMAs are okay, right? EMAs are okay. Yes, they'll give you an idea of what you can look for if you have been trading BTMM. All right, so let's look at another pair, USD CAD. Okay, here's USD CAD. USD CAD is not really, it has been moving down, so I don't really want to go too far, because people will think, oh, this guy is just looking at past history. I want to focus on more recent price action. Okay, this one not really that clean, but we can all see gold is still in a rally phase. Why? Because as you can see, gold gave us a higher high right there. Gold gave us a higher high. Where did gold come back to? Right? What was responsible for breaking this high? What was responsible for, let's go to the weekly so we can see it clearly. There we go. This base area, right? This base area right here was the one which was responsible for breaking this high. As you can see, this area was a responsible area for giving us this higher high. All right, now the same example that I just showed you guys. So we've got the higher high. This is your higher time frames. Remember, this works in any time frame. So if we can go back to our example really fast. Oh, okay, no, I changed that, guys. Sorry about that. No, I changed that. But you can rewatch the video, right? So this is what we have. We're looking at gold, right? So after structure was broken, remember what I said, some people, right, will find themselves entering along there, or even entering along there, and because of fear of missing out, some even enter along there, and guess what? All those people will get trapped, right? How do they get trapped? By this price approach. Where is this price approach going to? To the area responsible for breaking structure. Now, can you see how price has now moved away from that area? Right? The same momentum that we can see on the movement up is the same momentum that we're starting to see here. So it means our long-term view for gold, unless structure changes, is this area, right? As you can see, there you go. Unless structure changes, is that area. Now it works with the same thing, right? For those peak formation, for those people struggling with M's and W's, this is what we have right here. As you can see, we had the first leg being formed. After the first leg was formed, we've got a break in structure, giving us a higher high. And then what happens? After the market has given us a high high and a structure breaker, price comes back to that area, right? And then as you can see, price makes its move away from that area. Right, now this can be seen anyway, guys. Look at what we have, right? We've got a nice base area here. We can see the momentum away from that. We've got multiple structures being broken, right? Multiple structures being broken. And then as you can see, we have got price approach back to that area, and the same momentum we saw is the same momentum we saw going down, right? So this is all about market structure, guys. That's all. That's it, right? Market structure. But you have to be selective, right? Don't just think you'll open up any chart and see this. No. You have to be selective, right? You're not just going to trade everything on the market. It is not about trading everything on the market. Now, of course, there's a lot of other things that we look at right here. There's a lot of other things that we look at, right? But as I said, this is for, advanced people, not really for beginners. Right? If this is confusing you, then I would advise you join our Telegram channel and get our mentorship deals right there. Find the link in the description below. Right? So, still comes back to structure, guys. As you can see, look at what we have right here. Right, this structure was broken, right, giving us a lower low. Now this was the area responsible for breaking this structure, right? Price will give us the price approach back to that area, and as you can see how price has moved away from that area. So it's all about being selective, guys, right? You cannot just find this on any pair. You need to be selective, right? And you need to understand your levels, and you also need to understand your trap moves. Right, that's very, very, very important. right? It all comes down to being selective, guys. Here's something. Look at what we have right here, right? Remember, if we are looking at the cycle, after a 1350 crossover, right, we wait for the first bounce on the 50 EMA. All right, okay, let me just give you a clean chart, right? There we go, clean chart, right? Fine, we've got a nice move up, right? A nice move up, and we can see we've got some basing action right here. Why? We can see how price moved away from that. So what did price do after moving away from here? Price broke this structure, previous week high. Price also broke this structure, another week high. Price also broke this structure, another week high. And then what happened? This is where the hidden pending orders are, right? This is where price then came back to, and a reset was issued. And as you can see, this is where we then had more moves to the upside, right? So if we can switch back to our BTMM view, sorry about that, guys. Our BTMM view, look at what we have. From this peak, we've got a 1350 crossover. And after a 1350 crossover, the most high probable trade you wait for within a cycle is a bounce off the 50 EMA. There you go. That bounce off the 50 EMA is just market coming back to a base area. Alright. But as I said, you need to be very selective. And this is for advanced people, right? For some people this might be a bit confusing, and that's okay. You'll definitely understand it if you seek the right guidance and mentorship. Okay,